Hello, I'm Rhonda Porter, mortgage advisor and author of the blog Mortgage Porter, and I'm here for your weekly mortgage rate update for the first week of 2025. Optimal Blue reports that as of last Friday, January 3rd, rates averaged about 6.9% for the 30-year fix, and that is the dark blue line that you're seeing on this graph. The lighter blue line is actually for the jumbo rate, and the purple line is for FHA loans. But this rate of 6.9% is essentially what I reported on last week's update, so not a lot of change there. It's a busy week with it being jobs week, starting with the JOLTS report on Tuesday. On Wednesday, we have the ADP with 140,000 new jobs anticipated. And on Friday, we'll have the Big Daddy, the BLS jobs report, which is expected to show about 160,000 new jobs with unemployment remaining at 4%. We'll also have the Fed minutes being released on Wednesday. So the jobs data is really important because it's an indicator of inflation, and mainly we're looking at wage inflation. So the more that someone is paid to produce a product or provide a service means that that's more expensive that the item or service will be for the consumer. And so that is a form of inflation. So it seems like would be good news for the economy can sometimes translate to bad news for mortgage rates. So we'll be watching the data closely this week. And it's just before 1 p.m. Seattle time as I write this post. Mortgage-backed securities are pretty flat, just down 1 basis point, and the Dow is down about 56 points. For this week's In the Spotlight, I'm actually preparing an annual mortgage reviews for my clients. I wanted to share how owning a home can help build wealth or financial security. So this is for a client who closed on their home 2 years ago in South Seattle. They paid $750,000, and right now the home is valued at about $782,000, and that's according to HomeBot. And that's a gain of about $32,000 just in simple appreciation. So if they were to buy that same home today at a with the sales price of $782,000, that difference would be a payment of about $150 more in their monthly mortgage payment. It's just as a rough estimate. Before buying, they were paying about $3,500 a month in rent. And so if they were to continue renting, that would have been $84,000 to their landlord over the last 24 months. And instead, they have been paying themselves, and they have reduced their mortgage balance by $10,000, which I know doesn't sound like a lot, but it all adds up. So in addition to the $32,000 that they've gained through appreciation, they also have an additional $10,000 of a lower mortgage payment. So that's $42,000 that they've basically are benefiting from simply by owning a home. An appreciation for the Shorewood area where their home is located at is estimated to be at around 4.9%. So in 7 years, that would bring their estimated home value, if it stays at 4.9%, which is pretty conservative, I think, to around $1 million. And so, appreciation doesn't stay the same. It'll fluctuate. But that still is a nice projection. So this is an investment that you live in while you continue to pay yourself, by paying down your own balance, kind of like an automatic piggy bank. And so, and hopefully with the benefit of appreciation as well. So, and again, this is just a forecast. It's not guaranteed. But with our housing shortage and current situation with housing, it is likely that their home value will continue to rise. Last but not least, one of the great benefits of owning a home versus renting is that you're no longer dealing with a landlord, or the uncertainties that can come with renting. They have a home; it's theirs to enjoy and maintain. There are costs definitely associated with that, and they get to enjoy it with their cats. So this also helps them to prepare for their future. So as appreciation and paying down their mortgage will be a tool that they can use for retirement one day when they're ready to do that. So home buying can feel daunting, but you can do it. And if you don't know where to start, that's what my job is all about, is helping you to create a plan, helping you through the journey of homeownership. If your New Year's resolutions include buying, selling, refinancing, or remodeling your home or restructuring debt, I'm happy to help you create a plan, even if it's several months away. So take care, and I hope to talk to you soon. Bye-bye.